Hello. Another mixed week. Oil is up whilst most gas and electricity contracts close lower compared to last Friday. So let's take a look at the week's actions in some more detail. Front month Brent fell on Monday over $5 per barrel as market participants believed demand growth would weaken as lockdown measures in China remain in place and mass COVID testing begins. Brent then rose on Tuesday but didn't quite overcome all of Monday's losses. Despite ongoing lockdown restrictions, market participants were focused on the forecast of reduced oil supply from Russia in an already tight market. Oil prices closed on Wednesday relatively flat given the recent movements and lost $0.13 per barrel. The weekly EIA report showed an increase in stocks of 0.7 million barrels and a strong US dollar provided some downside. After a choppy day's trading, Brent finally closed up on Thursday to settle at $106.6 per barrel. That's up $0.23 per barrel compared to last Friday. Most contracts shed value on Monday, with the biggest losses being seen on the front month contracts. May 22 lost almost 18 pence per therm day on day. Prices fell thanks to weakness on the carbon and coal markets, as well as a healthy LNG supply outlook. Near-term contracts rose on Tuesday as gas flows were suspended to Poland from Russia. However, longer-dated contracts took direction from weaker, wider markets and closed down day on day. All gas contracts then opened in bullish territory on Wednesday as market participants continued to review the impact of Gazprom restricting flows to both Poland and Bulgaria, as the countries refused to pay for gas in rubles. However, late in the afternoon, most contracts gave up the gains. Some heavy losses were seen on most contracts. On Thursday, May 22 lost almost 20 pence per therm day on day to settle 24% lower than last Friday's close. Winter 22 remained bullish, but contracts from April 23 onwards all closed lower by around 9% compared to last Friday. Healthy LNG, planned deliveries and the market taking a benign view of the impact of Russia halting gas supplies weighed down on prices. Power prices tracked their NBP gas counterparts lower on Monday. May 22 lost £12 per megawatt hour and winter 22 lost £4 per megawatt hour. Summer 23 lost £2. Power contracts followed the movements of gas once again on Tuesday, with near-term contracts rising and longer-dated contracts losing value. Most contracts rose on Wednesday. Wind generation was weak and prices didn't manage to shake the early morning gains seen in gas. All power contracts closed down on Thursday, taking direction from gas and ignoring bullish carbon markets. Last night, most contracts closed lower compared to last Friday, with the exception of winter 23. You can download the full version of this market report from our website. Thanks for watching. See you next week.